Good afternoon. I'm PNP Brand and Retailing Sustainable Pipeline Responsible Person, Madam Zhang Jiabei. Very happy to reunite with you and PNP 2021 Global Zero Carbon Innovation Day. 2021 is a very important year for the zero carbon innovation development in China. This is a very active year. In June, we have started the innovation plan in China. Through many collaboration with many enterprises and startups, we carried out in-depth discussions and explorations. And at the end of this year, we would like to looking into the global stage through globalization innovation, this topic to carry out the innovation day. And we invite our colleagues from around the world to share with us the best practices around the world to get an insight into the sustainable commitment and new trends. And also we selected many key areas to share and also discuss with you. And our colleagues were going to share with us two very important parts. One is sustainable fashion, another is sustainable solutions to share with you related technology. Our South Africa colleagues is going to focus on the best practices in resilience, and our European team is going to focus in climate finance innovation trends, and as the frontier of the startups. We have already invited one startup company named Future Proof to make predictions through science and technology, and our Chenny from our Singaporean team is going to share with us the carbon compensation global practices, and Rebecca from the Brazil is going to share with us about the innovation opportunities in Brazil. We are very happy and looking forward to sharing our experiences with all of you. And on the stage, in the side, you can pose your questions to share with us. And the first guest, I want to invite my colleague, Matt. He is Director-in-Chief of our Sustainability team. She is going to share with us.
Matthew Claxton. I'm a Global Director of Sustainability at Plug and Play, and it's an honor and privilege to be with you here today as I tell you a little bit more about Plug and Play's sustainability journey over the last 2 years. So before we get into the sustainability program at Plug and Play, I just want to tell you a little bit about Plug and Play and then how we got to our sustainability practice. So we have humble beginnings here with our CEO, Saidi Namidi, where he was an early investor in some pretty notable companies out of his office in Palo Alto. Some of those include Google, Logitech, PayPal, and Dropbox. And he really caught the startup investment bug ever since. So fast forward to today, where Plug and Play is now a global innovation and VC firm. We're investing in about 200 companies around the world across numerous different industry sectors. But not only are we investing, but we're also working with over 500 of the largest organizations around the world with their innovation goals. And we run 60 accelerator programs per year across numerous different industry sectors where we're accelerating about 1,000 startups every single year. So as I mentioned, we still are a VC firm. We do about 200 investments per year. And this year alone, we've actually had 8 unicorns being born, and we're incredibly proud of them all. That brings our total count to about 28 unicorns so far, and we can't wait to see which ones are next. And our geographical expansion has been growing pretty rapidly. So today, Plug and Play has 42 locations all around the world, with a few more to come in 2022. So I mentioned a little bit about the industry sectors that we work across. Some of these include brand and retail, fintech, food, mobility, insurtech, IoT, healthcare, real estate, smart cities, travel, and the one I manage, the sustainability program. So Plug and Play Sustainability formally started in October 2019 with our partnership with the Alliance to End Plastic Waste. What the Alliance is a consortium of about 60 plus companies from all around the world and all across the plastics value chain that have each contributed each contributed to a collective fund over the next 5 years with the mission of ending plastic waste around the world. Plug and Play's role is we've been running the Global Accelerator program for them. So what we do is we are actively sourcing and scouting startups from all around the world from numerous different industries and bringing them into our ecosystem that we call Playbook. Today, we actually have over 64,000 startups in our ecosystem, and we're bringing in about 1,400 startups into our ecosystem every single month. We're bringing in startups that are not only industry agnostic, but they're also stage agnostic. So we bring in ones that are very early to all the ones that are pre-IPO, and we help them grow and meet with exciting companies with the goals of helping them reach their sustainability journey. So Plug and Play Sustainability has been running this accelerator program for the last 2 years with the Alliance to End Plastic Waste. And what you're seeing an example of how it works. So Plug and Play looks for startups that are focused on waste collection, sorting, processing, and end-use markets of plastic waste. We look for companies that are designing plastic to make it easier to recycle. We look for ones that create financial incentives for bringing plastic waste back, the ones that prevent river pollution prevention, and then lastly, ones that do waste material exchange, which connects the waste collectors with people who want to purchase waste material. We pass this along to our panel members. So the example here you're seeing is from our Silicon Valley program, where we had panel members from the Alliance, Suez, Shell, Total, LyondellBasell, Pregis, Nova Chemical, and ExxonMobil. We narrowed from a top 50 to a top 20. Those 20 present what we call a selection day. And ultimately, those 20 get narrowed down to a top 10 to 12, which then enter into our 3-month accelerator program, where we're helping these startups really grow, raise capital, get numerous pilots and POCs, and ultimately make a difference in ending plastic waste around the world. So in 2020, we launched 3 programs, one in Silicon Valley, Paris, and Singapore. Now, those programs went so well that the Alliance decided to double down their efforts with us. And so we launched new programs in Shanghai, Sao Paulo, and Johannesburg. And we've been incredibly proud of the progress we've been able to make with these startups and all the Alliance members, because it's driven a lot of tremendous impact. And so what do I mean by that? Is these are just some of the exciting numbers that have been able to come out of this accelerator program. So far reviewed over 3,000 startups from all around the world. We've accelerated 80, with 23 currently being accelerated. This has led to at least 120 commercial pilots and POCs, and more importantly, this has led to at least $65 million in capital being deployed into these startups to help them grow and expand their exciting business models and technologies, all with the goal of driving an impact in helping tackle plastic waste all around the world. So these are just a handful of the pilots and POCs that have been able to be formed. These are only the public ones. There's still about 100 private and confidential ones that we'll be announcing a little bit later. But we've helped create partnerships, for instance, like the Alliance and Neutrality, which led a global cleanup campaign, ones with Dow, Empower, Bifusion, Recyclite, Arclight, and Continuous Materials, all focused on mechanical recycling and getting and diverting plastic waste from landfill and using it for something of value good. And lastly, ones between Circular, Total, Volvo, Recycle Technologies, and Innovate UK, where Circular is taking hard to recycle plastic waste and tracking it through the value chain and getting it to a chemical recycler. If you have any questions, or if you like any other information on these different pilots and POCs, please make sure to reach out to myself or a member of our team. We're more than happy to pass along some more information to you. So not only have we been doing quite a bit of work in plastic waste, but we really want to accelerate the pace that we've been working in sustainability. So this year, we've also been launching programs in carbon neutrality all around the world. And we're very excited to be launching our program in carbon neutrality in Shanghai today. And we've also been running programs in sustainable fashion. The logos that you're seeing on the bottom of the screen are just a handful of the partners that we've been working with all around the world on their sustainability journeys, whether it be in plastics, carbon, or fashion. And we're very excited that we've also been, putting our money where our mouth is and invested in 20 startups in the last 2 years in the sustainability space. You're seeing most of them on the screen here, but there are a few that are currently in stealth mode, and we'll let you know once those become public. And lastly, our program is not only growing in terms of verticals, but we are still growing geographically. So I'm excited to announce that in 2022, we'll be launching programs in Alberta with the Alberta government around clean resources, and another program in Tokyo, which will happen about March of 2022. As well as all these existing hubs in Silicon Valley, Paris, Singapore, Shanghai, Sao Paulo, and Johannesburg will continue to build up their sustainability capabilities and work with more and more partners around the world. So if you're interested in getting involved, please reach out to myself or a member of our team, and we're more than happy to have a conversation with you to see how we can help you reach your sustainability goals as well. Thank you so much.
谢谢 Matt 的介绍。大家好，我是来自普悦中国。
Thank you very much for your introduction, Matt. I'm Wu Lanting, the Senior Analyst for Investment from Plug and Play China. Now I'd like to give you an overview to US carbon neutrality, 3 topics: the commitment of carbon neutrality, sustainable fashion, and resilient solution. Sophia will focus on the commitment of carbon neutrality in the US by 2035 in the zero carbon emission by electricity sector, and Diane will talk about feedstock, transparency, and digitalization of supply chain. Catherine will talk about the mitigation, new technology. Now the floor is yours.
Sophia Willis, and I'm the program manager for the sustainability team at Plug and Play's Silicon Valley headquarters. The United States has set a goal to reach 100% carbon pollution-free electricity by 2035. In order to reach that ambitious goal, innovation in renewable energy storage is a must. At a levelized cost of less than $20 per kilowatt per hour, long-duration storage would make 100% renewable systems cost competitive in the United States, with ample wind and solar resources. Also, leveraging the carbon pollution-free energy potential of power plants retrofitted with carbon capture technology could help us reach 100% carbon pollution-free electricity. Low-cost direct air capture coupled with low-cost hydrogen could enable production of carbon-neutral e-fuels. Research shows that many of the solutions I just spoke about already exist. It is the ability to adopt these existing technologies due to infrastructure and scaling limitations that are holding us back. In order to become carbon pollution-free by 2035, the government, corporations, and startups must work together to increase the scale and cost effectiveness of these existing technologies. Thank you very much.
Hi, everyone. My name is Dene. I'm a Ventures Associate at Plug and Play working in new materials, packaging, and sustainability. I am based in Silicon Valley in the United States, and today I will be discussing sustainable fashion. Up to 10% of CO2 emissions come from the fashion industry. According to the Ellen MacArthur Foundation, current greenhouse gas emissions from textile production already stand at 1.2 billion tons annually. That could account for more than a quarter of global CO2 emissions by 2050. In order to reduce the environmental impact of the fashion industry, we need to take a look at the full supply chain and entire life cycle of textile. But a few sectors that stand out when it comes to carbon are feedstock, transparency, and digitalization. A few brands already made quite a strong sustainability commitment, such as Nike, which aims to increase the use of low carbon materials up to 50% of all key materials by 2025, which includes polyester, cotton, leather, and rubber. Adidas is aiming to replace virgin polyester entirely with recycled polyester by 2024, and they're not the only one. H&M, Stella McCartney, Gap, Puma, and many more are trying to help for the cause. So let's take a closer look at feedstock. It is estimated that about 63% of all textiles are derived from petrochemicals, all releasing a considerable amount of CO2 emissions. So finding new solutions would help decrease carbon emissions overall. There are quite a few startups in the space, mostly all based in Europe, followed by the US and then Asia. The relation between bio-based and upcycled materials do change based on where they are in the market, as you can see on the regional breakdown. A great startup in the space is Ruby Laboratories. They upcycle CO2 emissions into new textiles, and we're very excited to have them in our portfolio. Let's take a closer look at transparency. The transparency sector includes software technologies that allow for improved sourcing and traceability throughout the supply chain. Demand for increased visibility and upcycling of materials can be met using technologies such as RFID and QR codes that enable traceability. A great startup in this space is Agitex, and they're part of our program right now, Batch Zero. They include the RFID directly in the fiber, which enable traceability of the garment, but also more transparency when it comes to recycling it. A survey of retailers from 2019 found that 75% were unaware of the source of their fabrics, and only 50% could trace where the garments came from and were cut and sewn. Could you imagine how can we become more sustainable if we're not aware of what is going on behind the scene throughout the supply chain and the manufacturing process? And finally, let's take a closer look at digitalization. New digital technologies are increasing circularity and decreasing waste in the fashion industry by targeting inventory and production challenges. The large amount of startups in this sector demonstrate the early need for digitalization and customization for change. That includes 3D imaging and sizing softwares, such as Precise, and are helping to reduce return rates, therefore decreasing emissions and energy costs associated with excess transportation. The virtual fashion startup DressX found that virtual clothing has the potential to use 97% less CO2, which makes sense. Virtual fashion is the design of clothing only online, and therefore you don't have that physical aspect, which of course emits a lot of carbon emissions. I would like to highlight one more time the the financial breakdown. You can see that a lot of startups here are at the seed stage and have difficulties going to Series A. This is due to the scaling up of these processes and the wait for investment in the space. And that's it for me for sustainable fashion. If you have any questions, don't hesitate to reach out. Thank you.
Hi, everyone. My name is Catherine Moldau, and I am part of Plug and Play's sustainability team based in Silicon Valley. I'm going to give a quick overview of how climate resiliency is an essential part of forming sustainable futures. At a high level, we can break resiliency down into mitigation and adaptation. For the purpose of this trend, we're going to be focusing solely on mitigation, which involves limiting and eliminating the threats posed by the inherent unpredictability of the climate and economic risks of transitioning our supply chains. To meet the growing demand for mitigation, startups are innovating in a variety of ways. To name a few, people have been creating platforms to track Scope 3 emissions, AI programs to predict supply chain disruptions, and sensors to monitor the physical climate. Through our startup analyses, we can see a very large percentage of startups targeting the finance industry, with construction and buildings not far behind. In regards to the global market, we observe momentum for new entrants increasing at a faster rate since 2017, which corresponds to the year the Task Force on Climate-Related Financial Disclosures published recommendations on how to disclose climate-related risks through ESG reporting and opportunities for growth. Startups reviewed in this space have raised a total of $171 million to date, with the majority of them raising seed rounds. North America has dominated the space historically and closely followed by the EU and APAC region. One startup we're particularly excited about in this space is Circular. Founded in 2017, they aim to bring transparency to materials supply chains. More specifically, through their software as a service digital platform, Circular is able to track raw material composition changes in order to monitor emissions and underpin circular economy ambitions. Thank you.
大家好，我是来自普悦中国的。
Hi everyone, I'm from Plug and Play China. My name is Dongbing Ye. Now I'd like to invite our colleague from South Africa to talk about the commitment of carbon neutrality and resilient solution in agriculture and energy sectors.
My name is Bakang Moeta, and I have the privilege of being part of Plug and Play's global sustainability team as a corporate partnerships manager based in Johannesburg, South Africa. As global momentum increases around building carbon neutral economies, South Africa is very committed to finding pathways that ensure that this transition is indeed a just one. This is critical for the South African economy and others on the continent due to the concentration of economic activity and employment in fossil fuel-linked sectors. Following COP26 in early November 2021, however, South Africa made historical headway in charting the development of an international partnership between itself, France, Germany, the UK, and the US to support the national just transition drive. Impressively, this partnership is underpinned by agreements to mobilize an initial $8.5 billion in concessional funding to catalyze the just transition in South Africa and to address critical enabling factors such as renewable energy infrastructure development, labor market upskilling, as well as investments into resilient technology innovations that my colleague Bongo will share with you later on. Enjoy the rest of the presentation. Thank you.
Hi everyone, my name is Bongo Chisanti and I'm based in Johannesburg, South Africa. Resiliency solutions help reduce and mitigate the impacts of climate change. As climate risks become more unavoidable, it is important to build resilience by designing innovations that assist with anticipation, preparedness, response, and recovery to adverse climate events. In Africa, according to the UNFCCC, there are increasing climate change threats for human health, food, water security, and socioeconomic development. African temperatures in recent decades have been warming at a rate comparable to that of most other continents, and are somewhat faster than the global mean surface temperature. There is also significant regional variability in sea level trends, with coastal degradation and soil erosion also a major challenge, especially in West Africa. These risks, together with extreme weather events such as cyclones and droughts, make Africa one of the most vulnerable regions. To build resilience and gearing towards carbon neutrality, African governments, the private sector, and stakeholders have been producing many innovative responses. South Africa releases around 470 million tons of carbon dioxide a year. It is the continent's largest emitter of greenhouse gases. And to mitigate impacts, South Africa has started geological mapping at the country's first carbon capture site in Leandra, where it plans to test the feasibility of injecting between 10,000 to 50,000 metric tons of carbon dioxide a year to a depth of at least 1 kilometer deep underground from 2023. The project is based in Mpumalanga province, which is in South Africa's northeast, a carbon emissions hotspot and home to several coal-fired power stations. The Ethiopian government is using soil sample analyses to classify their nutrient-deficient soils and to categorize fertilizers for their crops by essential nutrients. They also do this to identify highly acidic soils that require rehabilitation. This practice has not only improved farming practices, but it has also reduced greenhouse gas emissions, thus increasing the country's efforts towards a resilient and low-carbon economy by 2030. And finally, when we look at a country like Uganda, as a response to the negative events of climate change and to improve the country's coffee industry, Ugandan farmers are using the shade technique. By shading existing coffee plants and other trees such as banana trees, they can change the microclimate of the trees, reducing the temperatures around the growing areas by 2 to 5 degrees Celsius. Most notably though, bananas can absorb extra carbon in the form of methane from the soil and thus reduce drought challenges. These are some of the trends that we are seeing in Africa around carbon neutrality and resilience. And now, let's explore further trends in resilient solutions and carbon neutrality globally.
接下来，让我们把目光聚焦到欧洲。欧洲的碳中和将会围绕
Now let's look at the European countries. Georgia is going to share us about carbon capturing, storage, and utilization technology, as well as the financing needs. Nicholas is going to share with us the startup enterprise in climate finance. And also we have invited startups to share us about the innovation value through climate change prediction platform. Now the floor is yours.
Across EMEA. And I am based in Paris, so I will give you a short glimpse into what's happening in Europe. And so in Europe, 75% of greenhouse gas emissions comes from energy use and production. And so energy is really part of our everyday lives, from our heating during the winter months to the way we travel to how we produce goods. And this really means that shifting to a low carbon economy really requires action on every level of society. And so right now, Europe is an exciting place to be because the EU plans on spending 30% of its overall budget on tackling climate change. And we believe that that's going to open up more funding for innovation, more funding for technology that can really help major industries decarbonize. And so to transition into our next topic, trend topic, we're going to talk about climate fintech and insurtech. So just to set the stage, we're really going to need a variety of solutions to decarbonize. Many of you have already heard about some of these, and you're going to hear more later on as well throughout this event. But climate fintech is really critical to helping these solutions scale and adopt and become de-risked. And so what is climate fintech, right? While fintech was about disruption and improvement of the financial processes, climate fintech is the application of fintech with the goal to decarbonize the planet. This ranges from banking to asset management and also to insurance. And so climate fintech technologies such as big data, AI, blockchain, they're not new necessarily, but rather it's the application of these technologies in the decarbonization or carbon neutrality context, which is really new and exciting for us. And so I'm going to cover a few different trends that we're seeing right now and also that we're also really excited about. But climate fintech really covers the entire value chain. And so these are a handful of trends. Obviously, the first one is being payments, right? So how do we influence consumers to buy low carbon or sustainable options? We're seeing companies like Neutrality, for example, that tracks and quantifies a carbon footprint for each transaction of an individual and gives them basically a footprint based off of their credit card. We're also seeing a lot of risk analysis startups coming out using big data, AI to really measure their either transition risk or physical asset climate risk. Like Future Proof is a good example. You're actually going to see them pitch in a little bit. We also see a lot of, I would say, startups providing retail investors an option to invest or put their money in companies that are accelerating the transition to net zero, whether it's the public stock market or whether it's the venture capital asset class. One example is Carbon Collective, right here on the screen. They are an investment advisor really to put your savings into stocks of companies that are developing. This is the foundation of a low carbon economy, whether it's clean energy companies or EV vehicle companies, battery companies, for example. And then the fourth one is trading, both from an energy trading side of things, but a lot also in the carbon trading. We see a lot in that space, but there's a whole nother segment of the event talking about that. So really from the energy trading side of things, we're seeing companies like Dipole Tech, which is actually an energy trading platform based in China. They allow users to trade distributed electricity with blockchain and IoT. And then the last one is really like an overarching or underlying trend, if you will, which is data. We're seeing much more data coming in as these very physical industries are starting to digitize. We're seeing a lot of data come in, which opens up a huge possibility of making more efficient choices, having less waste, but also measurement for financiers and insurers to really make decisions based off of a company's sustainability. And so that's the ESG side of things, is new data sources. And now that being unsustainable is a negative risk, having these new data sources to measure your carbon footprint and other practices is really becoming core across financial services industries. And so beyond of what I've already spoken about, we will also want to highlight 4 quick areas that are evolving really fast and also that we still find exciting in other parts of the financial value chain. So first one is the banking sector. We're seeing a handful of green banks come up where they're using people's and individuals' deposits in their bank to invest into green infrastructure projects while giving green products to their retail customers. We're also within the lending side of things, we're seeing new tools and more capital that can open up financing for climate technology like solar, which I know is a huge market, one of the largest, if not the largest in the world within China. But also newer technology that is maybe a little bit harder to measure and finance and quantify when it comes to like a risk perspective. And then the last one is, second to last one is RegTech. We believe that regulation is going to play a big role in reaching carbon neutrality. So we're seeing a lot of companies that can measure, that can report, that can help either SMEs or large corporations stay compliant with the latest legislation. And then lastly is value-added services. It's more of a business model for banks and insurance companies, less so, let's say, a tech trend, but we're seeing really value-added services playing a huge role. And it's more of a new partnership model for banks and financial services and insurance companies to distribute climate tech solutions to their customers to help their customers along their journey when it comes to carbon neutrality, be more sustainable, and at the same time, de-risk themselves, which makes them even a stronger, more profitable customer. So lastly, I just wanted to end on this, why is climate tech so important? And climate fintech specifically, why is climate fintech so important? Because we need climate technology to mature. But maturity is not just technological readiness, right? It's also value chain maturity. It's financial maturity. So we can't afford the financial system to fall behind because then we can't finance, we can't de-risk, and we can't create these incentive structures for widespread adoption that we really need if we want to reach carbon neutrality. I hope you guys enjoyed. I know that was short and sweet, but in any case, thank you for everyone who's already working on this issue, and feel free to reach out to me if you guys have any questions. I'm always happy to chat. Thanks. Enjoy the rest of the event. Bye.
Hi, my name is Clotilde Venero, and I'm part of Plug and Play's Sustainability Ventures team based in Paris in France. So today, I want to give a few insights into the carbon capture, utilization, and storage field, a growing industry in the broader climate tech decarbonization landscape. So emissions capture, utilization, and storage, and developing a broader carbon economy will play a key role in reaching carbon neutrality by achieving negative emissions whilst our energy and industrial systems transition away from reliance on fossil fuels. As part of some research that the Plug and Play Sustainability team has done, we've reviewed over 74 startups in this space, as shown here on this graph, representing the cumulative number of startups working on CCUS since 2010, ranging from bootstrapped to Series D+ startups with over $1 billion in total funding raised across the startups that we reviewed. As part of this analysis, we saw that there are 3 main categories of startups as shown on the slide. The first category is direct air capture, or DAC. Those are companies that capture CO2 from the ambient air via either mineralization, companies like Heirloom or 44.01, or using fan-like systems such as Climeworks operating in Europe or Carbon Engineering operating in Canada. Direct air capture has the real advantage of being geographically flexible, allowing CO2 capture from distributed emission sources. However, it's associated with higher separation costs because of the lower atmospheric CO2 concentrations and sometimes requiring really high electricity usage. The second category of startup that we see are startups deploying carbon capture at concentrated emission sources. Remora is an interesting startup in this space, capturing CO2 from the exhaust of semi-trucks. Other companies such as Carbon Clean, Noya, or Svante capture CO2 at emission point sources such as power plants or industrial sites. Then the third category of startups that we see in this field are those producing useful products out of captured CO2 or the carbon utilization companies. Carbon utilization can be turning CO2 into chemicals or fuels with LanzaTech, Diocycle, or 12. But there are countless applications cross industries. For example, in the textile industry, turning CO2 into textiles with New Light, Ruby, or Azoya. Or in the construction industry, where Carbicrete or Carbon Limit are capturing CO2 directly into building materials. Another interesting carbon utilization startup is Energy Dome, using CO2 for long-duration energy storage. And I want to highlight that corporations can play a key role in helping CCUS startups scale, with the example of Climeworks and its partnership with Equinor, Total Energies, and Shell to scale direct air capture and sequestration. Corporations such as Stripe, Microsoft, or Shopify have also been driving down the cost of emerging carbon removal technologies by entering into direct contracts for negative emissions with startups like Climeworks, Carbon Cure, or Heirloom. And overall, we see that industry-agnostic solutions dominate this space, as a lot of these technologies can be applied cross industries, and reaching carbon neutrality is a critical global and cross-industrial challenge.
I'm Alex Gelber from Futureproof. Scientists believe the frequency and severity of climate disasters is increasing due to climate change. At Futureproof, we believe insurers need better technology based on modern methods to manage climate-related financial risk. Right now, weak price signals on climate lead to higher loss ratios and systemic risk, and we believe insurers need to identify strategies that sustain and grow market share despite climate change. Futureproof's unique solution to these issues is to build our IP using cutting-edge artificial intelligence, or AI techniques, applied to millions of residential and commercial insurance claims at the claim level. Our unique loss projections yield unprecedented accuracy and asset-specific granularity, and this in turn helps create price signals that align incentives for climate resiliency. This slide and the next illustrate what we believe is the predictive success of our models. This slide focuses on hurricane wind losses, and in the right-hand panel, you can see Futureproof's model for hurricane wind losses, and in the left-hand panel, you can see a standard model for hurricane wind losses. On the y-axis of these graphs, you can see the predictions of the models, and on the x-axis, you can see the actual losses sustained in the claims data that we have access to. So if the models were hypothetically perfect, the dots, which represent the data, would lie exactly along the 45-degree line, which traces out the set of points for which actual and predicted loss are exactly equal. And in fact, what we see is that the standard model does relatively poorly. In other words, the dots lie relatively far from the 45-degree line, whereas the Futureproof model does relatively well. In other words, the dots closely hug the 45-degree line. This slide focuses on hurricane wind losses, and this next slide focuses on flood losses, for which again, we see that the Futureproof model does relatively well with the dots following the 45-degree line broadly, and the standard model does relatively poorly. In both of these cases, both for hurricane wind losses and for flood losses, we're showing Futureproof's out-of-sample results. In other words, first we train the model on a certain set of data, and then for these slides, we test the model on a different set of data that we haven't touched in training the model. That in turn translates to projections of losses that have unprecedented accuracy and granularity. So for example, looking at two neighboring properties in Miami, one has twice the average flood loss ratio as the other, which relates primarily to the fact that one property is slightly closer to the coast, and it has a slightly lower first floor elevation, which leaves it open to flood losses to a greater extent. We're applying these projections in the context of an algorithmic underwriting MGA with real-time portfolio optimization that controls risk based on Futureproof's unique artificial intelligence-based loss projections. We partner with reinsurers, carriers, wholesale brokers, aggregators, and other MGAs to offer policies based on our underwriting. And our API and risk management dashboard use novel optimization techniques to manage a portfolio of exposures. Our value proposition addresses key market pain points. Our improved underwriting makes accurately priced coverage more widely available and reduces loss ratios. Our API for digital capacity management greatly reduces the expense and frictions of manual underwriting. We feature real-time portfolio optimization, and our AI modeling uniquely covers loss adjustment expenses and assignment of benefits, which are huge issues in certain portions of the insurance market. We believe now is the time for our solution. There's a huge need right now to deploy capacity in flood and hurricane wind with climate change increasing market dislocation. For flood specifically, we see large demand right now for flood offerings from current property writers, and for wind specifically, capacity is currently volatile. Moreover, we see significant demand for bundled flood and wind exposures to minimize claims leakage. Our vision more broadly is that climate-smart products will be the future of insurance, and that granular pricing of site-level and building resiliency measures will create incentives for building owners to invest in resiliency. Please contact us at info@futureproof.am, and we'd be delighted to talk with anyone about our offerings. Thank you very much for the opportunity to present.
Hello, my name is Patrick Fitzgerald, and I'm the VP of Commercial Development here at Silvera. At Silvera, we provide clarity for the carbon markets. And what that means is that we're providing data to large corporates, financial intermediaries, and other participants in the carbon markets so that they can better understand what's happening on the ground of projects and make better decisions that protect their reputation, save them time, save them money, and enable them to build out new sustainability-oriented business lines as well. We do that by leaning deeply into our geospatial and machine learning expertise and supplementing that with deep methodological expertise as well. And that expertise is really validated by the work that we're doing with the likes of NASA, which I'll come on to. So if we look at the good news, I suppose, is that sustainability is rapidly accelerating up the corporate agenda, driven by the likes of net zero and the pressure that's coming from institutional stakeholders as well. And all of this is meaning that carbon is now a risk issue for corporates that they need to actively manage. Carbon offsets is going to play a key role in this risk management, and depending on which projections you look at, this market is rapidly accelerating in size. It's also accelerating from a price perspective, and so just in the last 6 months, prices have more or less tripled for a single ton of carbon. However, this market is highly problematic. It's one that lacks transparency, so that it's very difficult to understand what's actually happening on the ground of these projects. It's also highly complex, so that it's very difficult to really get into the weeds of the 300 pages that come out on a regular basis from each of these projects. And critically, because of these two factors, it's also something that is really full of risk, meaning that it's with that lack of understanding, that lack of transparency, it's very difficult for an organization to know what they're buying and where their reputation is sitting. We see these risks manifest in very real terms on the reputational side through pretty aggressive press coverage. We also see an increasing focus on share price through activist activity from the likes of engine number one in the US, for instance, but also more historic asset managers like L&G and Aviva. On the wasted spend side, we helped a client of ours who are about to spend $10 million on a project where the trees simply don't exist. We helped them avoid that error, something that not only would have been a terrible waste of money, but also an enormous reputational risk. So we do this by providing really robust and completely independent data to our clients. And with that data, our clients can then pick the best offsets. They can ensure that their reputation is protected and they're insulated from claims of greenwashing. They can save money by making sure that that their investment is going into the projects that are performing best. And by accelerating diligence and by replacing any monitoring activities within the organization, we save enormous amounts of time. I mentioned at the outset that we're partnering up with NASA. We're partnered with them because we really are world leaders on this front. And so we are helping NASA move the data set away from manually collected measuring tape around the circumference of a tree models to instead taking up to 5,000 data points per square meter and using that data set to then inform a camera that sits up in the International Space Station. So this is really science fiction stuff. We're really pushing at the boundary of what is possible. And in terms of what that then looks like, we provide this library of content to our customers so that you can see all our ratings, which run on a AAA to D structure across multiple different scores. Some of the projects are not doing so well. And these, for instance, you can see within our mapping platform. You can take a look and interrogate what's actually happening on the ground of these projects. When I put that forest change filter on, you can see, for instance, that very much of this particular forest has been lost since the project inception, meaning that this, if you were to be buying your credits from this project and hanging your net zero claims on it, you're putting yourself at risk. It's not all bad news, of course. There are some great projects out there. For instance, in Brazil, we are looking at this project, which sits here right on the edge of extreme deforestation. But within the project area itself, the purple area, you can see that there is very little red, very little forest lost there. So we are backed by an incredible team, and we're serving large organizations just like you, providing an amazing service across policy, product, and our technical depth. We would love to work with you. Thanks for listening.
接下来非常高兴请到我们来自新加坡的同事为大家介。
Now we're very happy to invite our Singaporean colleague to talk about global carbon capture, including Nordic countries and also other world-leading companies' practices.
Companies are pledging to help stop climate change by reducing their own greenhouse gas emissions as much as they can. Yet many businesses find that they cannot fully eliminate their emissions or even lessen them as quickly as they might like. For many, it'll be necessary to use carbon credits to offset emissions that they can't get rid of by any other means. According to the ecosystem marketplace, the market for voluntary offsets came close to $300 million USD and traded almost 100 million metric tons of carbon dioxide equivalent in 2018. Estimates of the size of the global carbon compliance offset market range between $40 billion and $120 billion. And the markets are likely to grow even more. Spurred by demand from customers and pressure from their own employees, more than 170 companies to date have pledged to become carbon neutral by the middle of the century, if not sooner. That global potential for action is a big reason that carbon offsets are such a valuable tool to address climate change. Carbon offsets range in size from a couple tons that an individual can purchase to gigatons that national governments buy to meet their own targets. And compared to other air pollutants, carbon dioxide is being emitted on a vastly larger scale. So both the demand and the opportunities for offsets are also greater. Some wealthier countries are reaching diminishing returns in reducing their greenhouse gas emissions. Norway, for instance, is cleaning up the remaining carbon-heavy sectors of its economy right now with offsets. It's paying countries like Brazil and South Africa under the United Nations Clean Development Mechanism to help industrial plants switch to cleaner fuels and destroy potent heat-trapping gases. Working together, the countries lowered much more emissions than if they tackle the reduction on their own. Large companies are aiming for greater impact through larger investments, game-changing technologies, and government partnerships. Right now, some of the most popular offsets involve nature-based solutions like wetland and forest restoration projects. But carbon dioxide isn't the only greenhouse gas, and forests aren't the only way to soak them up. Gases like hydrofluorocarbons and nitrous oxide are potent heat trappers in the atmosphere, much more powerful than carbon dioxide. So reducing their emissions has a huge impact in mitigating climate change. Since they come from industrial sources, these gases are easier to quantify and track. When gases are captured and destroyed, the emission reductions are permanent. Some of the tougher offsets to implement are those for renewable energy and energy efficiency projects. The costs for renewable energy are dropping rapidly, and energy efficiency has an inherent economic incentive. In the future, offsets may come from sucking carbon dioxide straight from the air via technologies known as direct air capture. There are already companies that have built plants that can do this, but the challenge now is to deploy these giant CO2 scrubbers at scale, making them use vastly less energy and to make them much cheaper. Other tactics include ideas like engineering crops to draw in more carbon dioxide. Such offsets would be valuable for the sectors of the economy that are the most difficult to decarbonize, such as air travel. Demand for carbon credits is going up. EasyJet, Shell, BP, Microsoft, Google, Amazon, Nestle, Unilever, Disney, and many other companies have made major announcements over the last year about their intention to invest in carbon credits and the underlying projects, making it clear that offsetting is key to their sustainability strategies. In the hierarchy of climate action, the first and most effective option is almost always to reduce emissions. In other words, rather than buying offsets for your flight, see if you can avoid that flight entirely. Voluntary carbon credits could play a critical role in helping the world attain a 1.5-degree pathway. They can both accelerate the transition to a lower carbon future by enabling companies to support decarbonization beyond their own carbon footprint and help neutralize residual emissions by financing carbon dioxide removal projects. As voluntary carbon markets begin to scale up further, decision makers across industries should consider their own plans for participating in these markets in the near future. Thank you.
接下来我非常高兴请到我们来自
Now I'd like to welcome our colleague from Brazil to talk about South America commitment about carbon neutrality.
Oi, my name is Rebecca Yoshizato, and I am based in São Paulo, Brazil. Latin America and the Caribbean is a very diverse region, and climate change impacts it in many different ways. That's why 18 countries, including Mexico, Brazil, and Chile, created the Initiative 2020, where these countries decided to work together to align policies and investment focused in restore land by 2050 at a level that could help the region to achieve carbon neutrality. The initiative has achieved so far 8.2 million hectares of degraded land under restoration and 14.6 million hectares in new conservation areas. Brazil, during the COP26, committed to cut the emissions in 50% until 2030 and reach carbon neutrality until 2050. In addition to this goal, Brazil also has the statement Business Leaders for the Climate, an agreement from around 129 organizations that advocate for initiatives in low carbon emission and take responsibility for this transformation. Thank you.
感谢各位的分享。我们了解到全
Thank you all for your sharing. After your discussion, we know that the new situation in the global scenario, China will realize the carbon peak by 2030, carbon neutrality by 2060. We can see companies are very passionate about that. In the past years, we focus on the different aspects of life, including energy, architecture, fashion, agriculture, food, coating, and materials, and have discussion with a lot of companies. We have discussed with our partners to talk about the fashion industry startups, including bio-based application of materials, 3D application, plastics, and with AEPW, we have the Shanghai Innovative Platform. We have 12 plastic supply chain management company. Together with Deloitte, we have the accelerator, and with Oatly, we have the technology exploration. With Astorio, we have the zero carbon project. For China's neutrality project, we will have more information. Please tune in. So if you have any question about our discussion and information, please contact us please scan the QR code at the bottom of the page or reach out to us via email. Thank you very much for your attention. See you next time.